It is time now to focus on the Hyderabad edition of ET Now on the go. My colleague Cheryl D'Souza caught up with Gopi Krishna Patibanda, who's the chairman and MD of Phoenix Group. Let's go across and listen in to what he had to say about the company's plans to cement the group's growth.
Over the past 30 years, Hyderabad has seen a lot of commercial growth, and since 1996, when the first cyber towers was initiated, from that day to today, Hyderabad has seen roughly about 100 million square feet of development. In 30 years' time, getting to that scale of development was something which was unimaginable, and I feel that the key point for it was human resources. The biggest benefit for Hyderabad city has been that the kind of engineers which are required for doing this job, they were always available. So that's the key reason why this is done. And in terms of commercial real estate, till about 2014, per year average should be about 3 million square feet of intake, which was demand. Whereas now the average demand is come to almost about 10 million square feet per year. In the coming post-COVID, the situations are changing, and with work from home culture going a little slow and companies pushing for employees to coming back to office, looks like in the next 3-4 years, Hyderabad will stabilize around 14 to 15 million square feet of commercial real estate requirement as demand, for which there may not be enough supply in terms of grade A office space.
All right.
So demand is higher than the supply.
I wanted to understand, given the fact that about your company itself, you landed that 1,050 crore deal with GIC, especially for Phoenix Aquila, where we are currently at. Are you seeing more global investor interest, given the fact that this is ever developing, and you said there is a lot of demand here?
Since 2006, when this foreign direct investment came into picture, we've been doing a lot of deals with a lot of foreign partners. GIC happens to be one of the Government of Singapore entities. We've also been working a lot with S&S AI REIT earlier, which has been now taken over by CapitaLand, which is also a Government of Singapore entity. We have a lot of investments coming in from the Government of Singapore side into India and in Hyderabad city with us. So this 1,000 crore deal is just one of them. In the next coming 2 years, I think we will be seeing an average of not less than 4,000 to 5,000 crores of investment.
So this is just a drop in the ocean.
Yes.
Mr. Gopi, we did speak about the IPO. You have a strong investor interest. You have a very strong portfolio as well. Is there any plan for Phoenix Group to go ahead for an IPO? Because now you have a lot of players actually entering the IPO market, trying to actually dip into the public market.
See, most of the IPOs are real estate development is done in a different manner, where they'll need a lot of investments to buy lands.
Right.
Okay, whereas we've taken a stand not to buy lands. We've always sort of dealt in properties where the landowner believes that we are capable, and they give us land on development, and together we've done buildings. So practically whatever investment which is required is very limited, because we are not buying lands. So for one of the reasons, we've chosen not to sort of go for an IPO as of now. But one of the things is that the whole world is going towards REITs.
Right.
So we will be looking at entering into a REIT, but we are a Hyderabad-based local company. So we might piggyback onto one of the existing partners like CapitaLand or any one of them whenever they go to a REIT, because they are holding on to possibly 60-70 million square feet of space. We'll add another 30 million square feet of ours into theirs. So effectively about 80-100 million square feet of space going into a REIT is a very good option. So we will be looking at getting into a REIT.
So REIT is the option, not the IPO,
not an
especially
IPO,
given the
as
fact
of
that
now.
as of now you are a commercial
Yes.
real estate
Yes.
developer as well. So I wanted to understand the other aspect is the fact that beyond commercial real estate, you are also expanding into residential, data centers, warehousing. These sectors are actually also gaining traction. So which one do you think will be the next leg of growth driver for Phoenix Group?
See, warehousing is a good market to have, but then practically Phoenix has been very focused on city-centered properties.
Okay.
And technically, we've never bought lands. So we've always had a concept of trying to convince a landowner to get into development with us. If a landowner cannot get convinced I can do a good business, there is no way I can do business. If an investor cannot get convinced that I can do a good business, there is no business for us. If a banker cannot feel that I can't, there is no business. Having convinced so many people, convincing a customer is the easiest job for us. In this sequence, warehousing and data centers, all of them require us to buy lands. So there was a little bit of resistance internally to even get to that stage. But possibly in the coming years, we will be looking at associating in data centers and logistics where we have surplus cash flow that we can invest on lands and start doing warehousing.
Right. What's your take coming on the fact that there is a rise in the construction cost? Interest rates have been elevated for a while, no doubt. We've got some sort of a cut, but that transition will take time. So I wanted to understand exactly how have you been able to maintain your profitability despite all of this?
See, effectively the dollar rate used to be at one time 30 rupees. Today the dollar is almost about 88 or 89 rupees a square feet effectively. Between yesterday and today I wouldn't know. But while employees are expecting salaries to be growing up, we expect costs also going up. So there is no disparity there. So you want higher salary. Till yesterday I was earning 1 lakh rupees, this year I want 1,10,000 rupees. You want that to grow, but you don't want cost of construction to go, it won't happen. Labor cost is going up, everything is going up. While that is going up, the customer also understands that so much of cost is going into it, you will have to pay for it. Effectively, the margins could be around 10 to 12%, and there will be a demand and supply issue because of which you might bring down the margin to say possibly 3% for a shorter period of time. Again get back to a normal position when the demand is higher than the supply. So it's always about playing it in that positioning. Because of the locations that we do, we've always been capable of trying to present ourselves as a little more premium player compared to the competition. That's the reason why we were able to achieve that marginal difference even if the costs have gone up.
I hope that we hear about REIT very soon for Phoenix Group as a whole. Thank you so much,
Thank you,
Mr. Gopi, for joining us on the show and talking about Phoenix Group.
If you like this video, then like, share and subscribe to ET Now.